Hey traders, how's it going? It's Scott Schneider from the Live Trading Suite over in the futures room, coming at you with a shadow short today. We are looking at the SPX candlesticks. We're looking at the daily chart, and you can see that today's session did close above the 8 and 21 EMA. I got the 8 right at this purple cross, a 21 right at this orange cross. One thing that I want to bring to our attention is that since we made those lows on August 1st on that gap down that was retraced in one session, we have been making higher lows every day. So we have been doing what the concept of one time framing on the daily chart. And that's a pretty powerful market force that you don't want to ignore until it breaks. So definitely, tomorrow, if we do get selling, you want to see, are we going to look below the previous day's low? That has not really happened since August 1st. If it does, what happens? Do we test the 8? And, we'll monitor for continuation. One thing that is interesting is that we are presently back inside the range of the session where we made the all-time high on the 31st. So now of July. So now we are, back in there. We've been in there for a couple sessions, and so we're starting to have some acceptance of time. And I think tomorrow with the CPI reaction, it will be pretty significant. Obviously, I have no idea which way the market's going to respond, but I do have some levels that I am looking at quite closely, and I'm going to share them with you. So I'm looking at, now we're going to move over to the profile. So we're done with the SPX. We're done with the candles. We're going to go over to the profile. We're going to look at ES. You can see today's session. If you're not familiar with the profile, just think of it like dailies. This is today's session. This was Friday's. This was Thursday's. Blue shaded area, value area, 70% of the day's activity. And the point of control is the where you can see the most amount of letters lined up together. And that's at 64.1450. So the level that is going to have my attention most tomorrow is going to be 63.90. All right, and that's pretty close to our RTH low. Now, it's significant for a couple reasons. One, if we get down there tomorrow and we look below it, we're going to be very close to that, stopping that one time frame that I talked about. That's going on the ES chart just as much as that's going on the SPX chart. And two, that is also an area where in the first couple hours, looking at, just options that expire tomorrow, that is the level where dealer positioning would kind of flip and potentially go negative. Now, obviously, there are more factors at play when it comes to dealer positioning. You got your charm, you got your Vanna. I understand that. I don't understand it all, and I also understand that it's a moving, pieces. But I do think for the first couple hours, you can use that 63.90 as a pretty significant level to determine, how extreme the moves might be. For instance, if we are looking below that area, let's say we look below today's RTH low and we start coming into, the last week's value area ranges. At that point, dealers will have to sell if there is selling to hedge their delta. They'll have to buy if there is buying to hedge their delta. And that's on the thesis that this 63.90 on a small intraday level does keep them, in a negative environment, for just tomorrow. And really, as we head into the second half of the day, I won't be looking at 63.90. That number will be changed. I am telling you now, it's going to be there for the first couple hours. If we happen to not get a big downside reaction, we need to consider something that, similar that happened on Thursday of last week when the market was expecting a big downward move on the heels of, whether it was geopolitical tariff stuff. The pricing of puts was much higher than the pricing For calls, if you were looking like, 40 days out, same strike, same delta, you're paying a high premium for puts. And so how did dealers protect against those puts that they have to take the other side of the trade of? They sell futures. So if we don't get a major reaction tomorrow to the downside, and in the afternoon, you see us kind of just back above today's halfback, which is around the 64.10, and we could, I would maybe look to see us above the 64.13-ish area. We could potentially start moving, and if we get past 64.25, that would be an area that I do think is going to be sticky tomorrow. If we do get past there, then things could pick up a little bit, and the system could start feeding on itself. In terms of to the downside, the last reference I will leave you guys with is going to be down at 63.25. We lose that tomorrow, and the market can really pick up some pace. But remember, this is not a prophecy. This is a thesis. All right? My plan could change based off of how the market opens, and we should always be able to remain fluid, especially for my shorter term intraday traders who are trying to have directional unhedged moves. So trade smart, trade safe, and I hope to see you guys in the room. Peace. Hey, this is Scott Schneider from the Futures Room over at ShadowTrader Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons. And if you'd like to trade live with me in real time, please click the link in the description below. Have a great day and happy trading.